Trading on hope is one of the most dangerous things that you can do as a director because it feels productive, but legally and financially it's often reckless. And taking on personally guaranteed debt when your business is already insolvent, listen, that is not a last throw of the dice. That is how you destroy your own safety net. Now, I want to walk you through a real case that we've dealt with. It's not a theory, it's a real person, real numbers, real consequences. And the problem is this director waited. He hoped HMRC wouldn't do anything. He didn't think that they'd escalate. He borrowed more money when I told him not to. And he trusted PG insurance would save him. And in the end, he's had to remortgage his home to clean up this mess. And the worst bit, okay, and this should stop you in your tracks, almost all of this was avoidable. And it's not about bad people. He's a good guy. He's been a decent director for 15 years. What his problem is making emotional decisions under pressure and not understanding how insolvency actually works. And this is why it matters. If you're a UK director and you're behind on VAT, corporation tax, PAYE, and you're considering taking more borrowing, you're thinking, just one more push, things are going to get better. This video could save you years of stress and tens of thousands of pounds. So let me tell you about this situation. This guy was in construction. He was the managing director. He wasn't a cowboy. He wasn't a fraudster. He wasn't someone who was set up in 2020, right? This was a guy who was good at his job. He paid tax for years and years, but his business income was lumpy. I mean, if you're in construction, you probably know he didn't make money getting on a site. He didn't make money getting off a site. The idea is he'd make enough money in the middle, and he had done for years and years. Now, the fact that his income was lumpy, HMRC don't care, you know. And once VAT builds up and he missed a few quarters and his corporation tax started slipping, the pressure just quietly built in the background. Now, one of the early mistakes, and lots of directors are guilty of this, is he was using tax as working capital. You know, oh, listen, we've all been there. We have all been there. I've been there, right? I'm not here to judge. But that should be ring fenced, okay? I'll tell you what I do is, and I'll use this example, £1,000 invoice, so it's £1,000 plus VAT. You take the £200 and put it in a VAT account, okay? You take another £250 and put that in a corporation tax account. The reason why I do that is because I know every quarter when I have a VAT bill, I have more than enough in my VAT account to pay it, okay? And it's like I have a little bonus back for the working cash flow when I get told what my VAT bill is, right? You need to ring fence taxes, but he used it to survive. You know, he had contractors screaming at him, wages needed to be paying, and instead of telling them bad news, he took the VAT money out and paid them. We've all been there, okay? Same with the corporation tax. It should have been planned, but he just kicked it down the road thinking, you know what, this next job will work. I'll make the money back. And he just didn't engage early enough. Now, for over a year, HMRC sort of accepted what he was saying. I spoke to this guy over 12 months ago. I said, listen, we've got to start speaking to HMRC. You've got to go to them with a robust argument as to why you're not paying, why you keep falling behind. He had a time to pay arrangement set up. He defaulted on it. He got another time to pay arrangement set up and he defaulted on that. And he totally misread the situation. I mean, his view was, well, HMRC haven't done anything yet. I've missed 2 time to pay arrangements. Maybe I'm okay. Maybe I'm, you know, they've forgotten about me. But he wasn't okay. He was just in a queue. Like HMRC, like they're not emotional, they're procedural. If you're not hearing anything and you owe HMRC money, it doesn't mean they've forgiven you. It doesn't mean that they've forgotten about you. It means your file hasn't reached the escalation desk yet. Now, I want to tell you about what this guy owed, right? He owed corporation tax of £180,000, okay? So he'd had some good years previous. He owed VAT of £65,000. I think in the end he actually owed a lot more VAT because he started to get behind on his returns, but that's what he told me. He owed a bounce back loan of 40 grand. It had a bank loan of £20,000, okay? And there was a personally guaranteed loan in the end of £50,000. So it was about £355,000 worth of debt. And he had a director's loan account of £80,000, okay? Now, when I first spoke to him, I sort of went through the numbers and he was insolvent, you know. He couldn't pay his debts when they fell due. His liabilities were more than the assets. But he always had the hope that this next job would come through. In 2 months, Chris, I'm going to be okay because this will happen and that will happen. And I'd speak to him in 2 months and he wasn't okay. It was getting worse, okay? This business was not temporarily struggling anymore. It was never going to get back on an even keel. And I'll talk to you about his director's loan as well, because obviously on top of the business debts, there was a director's loan account. And it increased from the time I spoke to him to the time he actually went into insolvency. And the reasons why, listen, I'm not here to judge, right? He wasn't meant to do this, but he needed to take a certain amount of money out of the business every month to pay the mortgage, pay the car, pay the food. And yeah, it just got out of hand. Now, this is what you need to understand as a director. If you've got an overdrawn director's loan account, it's an asset of the business. You owe the money back to the company. It doesn't vanish, doesn't get sympathy, gets pursued. And listen, this is the worst decision that this guy made, right? And he said to me, Chris, it's a final roll of the dice. And I'm like, oh God, no. It's not a final roll of the dice, okay? A few months in, after I'd spoke to him the first time, like, stress had took over this guy. He felt trapped, wanted control back, he wanted hope. He really didn't want to go through insolvency. He really didn't want to go through insolvency, and I get it. But what he did is he borrowed more money that were personally guaranteed. And I said, listen, let's call him John. Call all these directors John. I says, John, you can't do that. I says, it's reckless. You've got no hope of recovery here and you're borrowing more money. And what's worse is you're putting it's a personally guaranteed loan. And I get sometimes you'll have to borrow money that's personally guaranteed because you know by borrowing this money, it's going to get you out of the mess. And in that case, listen, it's a good enough reason. This wasn't for this guy. I advised against it clearly, repeatedly. Because, you know, once you pass the point of no return, new borrowing isn't going to save it. It's just going to reallocate some of that pain. And this is why PG debt is so dangerous, okay? It's a personally guaranteed, okay? Which means if the business fails, this becomes a personal debt. And I see directors, they convince themselves with, if it works, I'm the hero. Some of them are that blindsided by it. They think, well, if it don't work, the company will take the hit. That's nonsense. It's a PG debt. It survives any insolvency process. It's going to follow you, the director, around personally. Doesn't care whether you're stressed or you did it in the goodest of intentions. This is how limited liability gets smashed to pieces and you become personally guaranteed to it. And to add insult to injury, like this guy he says, Chris, don't worry, I'm going to take PG insurance. And he thought that would protect him. And on the surface, like, listen, it sounds sensible. I'm going to take a personal guarantee debt on, but I am going to get personal guarantee insurance because if it fails, the PG will step in. Well, guess what? PG insurance is not going to pay out. And I'll tell you why. Because the borrowing was taken when the company was vastly insolvent and he didn't declare it. So timing always matters with these things. PG insurance is a really good idea, but it has lots of exclusions, okay? And those underwriters are going to look at a claim and they're listen, the truth is they're going to see, is there any breach here? And there was clearly a breach. And then things become really serious because guess what? You know, HMRC, who we'd not heard anything of. You get it? I got a phone call, Chris. I'm getting people calling me about a winding up petition. But I've not received one. And that, by the way, that's what you're going to all hear first of all. Generally, before you get your winding up petition in your hand, you're going to get emails off people telling you you've had a winding up petition and that they can help you, or you're going to have people calling your office saying you've had a winding up petition, we can help you. But yeah, the winding up petition got issued from HMRC. And listen, you need to understand this. When a winding up petition comes, it's not a threat, it's done. Like, you're being wound up. I had one the other week. Oh, well, I want to do a payment plan. There's no payment plans when HMRC goes to wind you up, okay? And it's designed to basically kill a company off that can't pay its debts. Because once it comes through the door, listen, your timescale, it's over, okay? Like, you have a few weeks before that gets advertised. When it gets advertised, your bank's going to be shut down, okay? People will know about it. Your reputation is in tatters and your options shrink rapidly. So what did we have to do? Right, first things we had to do, we had to wait for the petition to actually come, and we got a solicitor on board immediately, okay? And what you do is the solicitor, this doesn't work with everyone who issues a winding up petition, but it does work a lot of the time with HMRC. We got an insolvency lawyer to speak to HMRC solicitor and say, listen, this business is going through a voluntary liquidation. Our intention is to have it into liquidation before the petition is heard. Will you withdraw the petition for costs? Okay, on the basis that the company's in liquidation before the hearing date. And HMRC agreed. I think their costs are about 900 quid at the moment. It cost them about 1,500 quid with the solicitor. So it's probably adding an extra 2.5 grand onto the cost of the job. But what have we got to do now? One of the big problems with this guy, remember, 80 grand overdrawn director's loan account. Now remember, that insolvency practitioner has got a duty. Their duty is to recover company assets, okay? And an overdrawn loan account is a company asset, okay? So they've been appointed, the insolvency practitioner, right, you owe £80,000. How are you going to pay it back? Now the director was, I've got his settlement here. The director was frightened to death because he had an £800,000 house with only a £400,000 mortgage. So he's thinking, right, I'm going to lose my house here. I'm definitely going to lose my house. Because on paper, it looks like he can afford to pay it back. So we stepped in again and we negotiated. We helped him negotiate a settlement with the insolvency practitioner. Because guess what? Insolvency practitioners have a discretion to accept a settlement on a director's loan account. And it depends on a number of things. And really, what they've got to try and do is get a better realisation for creditors than they would in a bankruptcy. So I'm going to go through the settlement. Okay, his house was worth 800,000. But let's say in an insolvency scenario, a forced sale valuation, it'd probably be sold for 85% of what it's really worth. So that figure would come down to 680. Well, his mortgage was 300, so there's 280 grand equity in his head. So again, he's thinking, right, well, I'm going to be made bankrupt. Now, to sell the house, remember, in a bankruptcy, it's a percent. So that'd be like, let's say 8 grand. Solicitors is 3 grand plus VAT. So the available funds would be £268,000. But he were married and his missus had nothing to do with the company. So even if you're being pursued for an overdrawn loan account, if your missus or your husband, the insolvency practitioner hasn't got a claim on their share of the house. So his equitable interests were about 130 grand. And again, well, I owe 80,000. I'm going to end up being made bankrupt. I'm going to pay it all back. So on the face of it, although he has £130,000 to go at, which is his interest in the property, you've got to look at it. Well, the cost of making someone bankrupt are quite high. I mean, you've got petitioning costs of a couple of grand. You've got something called the official receiver. Their set cost is 6 grand plus VAT. You've got a trustee in bankruptcy who will take at least 15% of realisation. So in this scenario, it'd be about 25 grand. Let's say 25 grand for solicitors' fees. So it was probably going to cost about 60 grand, maybe more with the trustee in bankruptcy's costs, to make this guy bankrupt, okay? And so if that happened, the maximum funds for distribution would be 75 grand, 74 grand. Now, again, that looks like, well, his better option is to make him bankrupt. But insolvency practitioners don't like, most insolvency practitioners don't like the risk of doing this because it's going to be expensive and they're going to have to foot the expenses. And it's quite risky. You know, for this to play out, this bankruptcy to play out, it'd be 3 years down the line. You know, this guy, by that time, could have got a load more personal guaranteed debt, because I'm going to come on to that in a second. He could have sold the house. So anything could have happened. 3 years is a long time. And although it said there that if we made him bankrupt, they get about 75 grand into the pot, we're not factoring in his personally guaranteed debt. Now remember, he had a 50 grand personally guaranteed debt that he'd taken when the company were insolvent, and he had another 50 grand worth of personally guaranteed debt. This guy owed 100 grand personally. Now in a bankruptcy, that 100 grand he owes, right, that he also owed, will also get a claim on this 75 grand that would be distributed. So in real terms, the dividend in bankruptcy would be about 30 grand. And it's risky. It's 3 years down the line. So we managed to negotiate a settlement where this director offered £40,000 within 3 months, okay? He halved his overdrawn loan account. But he had to remortgage his house. It's not because he was dishonest, not because he were a fraudster. It's because he waited too long. He traded with no realistic recovery. He took a PG debt on that he didn't need to. He totally misjudged his personal risk. Now, these are the lessons that I want you to learn here. Wishful thinking and positive thinking is not a strategy, okay? Stop doing it. You've got to see things as they are, not worse than they are. Now, or better than they are. Lesson 2, listen, personally guaranteed debt is going to convert into a personal issue if you go into insolvency. Please don't take PGs lightly, and please don't be taking on personally guaranteed debt if your business has got no hope of recovery. Lesson 3, waiting for HMRC always makes things worse because they are not leaving you alone. They do not forget, and in 2026 HMRC have never been more aggressive. Lesson 4, early advice gives you more options. Control matters in these scenarios. So what should this director have done instead? What should you do instead? First of all, face the numbers early. Again, get your up-to-date creditors list. Who do you owe money to? Get your statements. Find out exactly what you owe. Get all your returns into HMRC. Exactly what do you owe? And if you've got no hope of recovery, you really need to stop trading and look at some insolvency processes. Do not sign PGs under pressure. Understand where your director's loan account is and get advice before you lose control, okay? This director didn't need more debt. He needed a decision. And if it sounds like you, or it feels uncomfortably close, give us a call. We'll help you understand your options. We'll help you mitigate risk. We can help you close down the company and move on without dragging, you know, the business failure into your personal life and ruining that. So it's Chris Worden. I really appreciate you watching these videos. If what I've said has interested you, click on the link before. I should have said that earlier in the video. One of my team will call you today. And go and have a look at this video here, because it's going to tell you everything about overdrawn loan accounts, how to understand yours, what we can do if you've got one. Thanks for your time. Bye-bye.